we can't do that. That's not something the Fed can do. We also can't address the potential societal disruptions that could happen, potentially, if there's really significant job loss. So there are a lot of, we're the least of it. There are potentially really significant implications for people in the labor force. And I think we're all speculating about what those might be, but it's only the beginning of this story.
The last 2 days has been AI. So as the Federal Reserve, like all of us, grapple with the implications of generative AI, what plans are in place to assess its long-term impact on productivity, implications for labor markets, and overall economic stability? And does that present any new risks to monetary policy or financial stability?
So you're right. We're doing what other people are doing, which is, reading all the things that, so many researchers are working on AI now. It's just amazing. And so we follow all of that. We also have people at the Fed who are doing lots and lots of research on AI. And, in terms of, it's just such early days to be looking for the kind of things that will happen. So, the question of productivity, it was Robert Solow who said that technology is showing up everywhere, but in the productivity data. So this could be the same kind of thing where it's there, but it takes a long time kind of to show itself, because you would think of another big technological advance as potentially raising productivity, but I think it's early to say that we're seeing it. Also, you're seeing, I think some researchers have found effects on hiring from AI for entry-level people and for coders and things like that. So there's probably some of that out there, but it's just so early to say what it will be. We also monitor very carefully what public companies are saying. Increasingly, bold statements from mainly large private companies on things that they think they can do across their whole business area with AI, and either sort of freeze hiring where it is or reduce hiring. And I think we're pretty aware of what the potential outcomes are, but the range of potential outcomes is very broad. I will say, in terms of what the Fed can do, we deal with supply and demand. We have interest rate, and we also do regulation, that kind of thing. But if what's needed is greater education and skills, I've always liked the model that technology can work for everybody as long as everybody's getting the skills and aptitudes they need to use that technology. This is Golden and Katz, their work, which they actually spoke about at Jackson Hole this year, but it's a 20-year-old book that they wrote. So we can't do that. That's not something the Fed can do. We also can't address the potential societal disruptions that could happen, potentially, if there's really significant job loss. So there are a lot of, we're the least of it. There are potentially really significant implications for people in the labor force. And I think we're all speculating about what those might be, but it's only the beginning of this story.
Walmart jumping 5% today, notching a new record close today. The company announcing a partnership with OpenAI to allow customers to buy goods directly within ChatGPT. Shoppers will get video and images along with purchase links inside their conversations. And this begs the question, will ChatGPT be incented to direct shoppers to Walmart over some alternatives? For more, let's bring in CNBC's Mackenzie Sagales. Mac.
Hey, Mel. So to your question, no, this doesn't mean that Walmart gets priority placement inside of ChatGPT. OpenAI told me that product results remain organic and unsponsored, ranked purely by what's most relevant to the user. Walmart simply building its own shopping experience into ChatGPT through a new tool called Instant Checkout. That makes it possible to complete a purchase, not to game the results. I also asked about how much of a cut OpenAI gets. They say that those merchant fees are bespoke, negotiated case by case, and it's not disclosing Walmart's cut. Now, that is important because this is one of the first ways that OpenAI is monetizing ChatGPT beyond subscriptions, with a fee structure that could ultimately resemble Apple's App Store. Investors are clearly rewarding the move. Walmart's market value climbed about $41 billion today, its second strongest session of the year, trailing only April 9th when Trump rolled back his tariff plan. Now, Walmart doesn't usually move this much, and that underscores just how powerful AI-driven commerce could become. Big picture, everything OpenAI is doing in shopping and search chips away at Google's dominance, positioning ChatGPT as the new starting point for discovery online.
Great. Looks like you need a good wine pairing. Take a look to your right. Your age has already been pre-verified through your profile, so no need to wait for an ID check. Just place the item in your cart whenever you're ready. I'm getting a notification from your connected smart fridge. It looks like you already have a full gallon of milk at home. Should we put this one back? Good news, your oil change is done. Your vehicle will be ready at the Tire and Lube Express. I've added the service charge to your cart.
I believe that China purposefully not buying our soybeans and causing difficulty for our soybean farmers is an economically hostile act. We are considering terminating business with China having to do with cooking oil and other elements of trade as retribution. As an example, we can easily produce cooking oil ourselves. We don't need to purchase it from China.
As far as the situation with China, Maria, this is China versus the rest of the world. They announced these export controls that are going to go into effect next month, and we have aggressively pushed back against them. We're not sure where this came from, why the Chinese have decided to do it now, because you can see that that the United States is led by a man of peace, Donald Trump, and China. That this was a provocative move. We have substantially de-escalated. President Trump said that the tariffs would not go into effect until November 1st. He will be meeting with Party Chair Xi in Korea. I believe that meeting will still be on. There has been substantial communication over the weekend, as opposed to right out of the blocks when the Chinese did not respond to any of our inquiries. World Bank, IMF week here in D.C., and so there will also be lots of staff-level meetings between the United States and our Chinese counterparts.
Welcome to the Crypto Teacher. Don't forget to like and subscribe to the channel.
And I come back with that video just to make you think. And make sure you're joining the Patrons. If you're not a part of the Patrons, make sure you're heading to Cash App. Also, go like and follow the TikTok. More videos to come. And remember, your life is an illusion and TV is your reality. We had Jerome Powell in the house. And he basically went over the last 5 years. I'm not going to go over that. But guys, we know he's out in May of 2026. And he's going to ride off in the sun while this economy crumbles. He was behind them printing 80% of all money in existence in 2 years. What do you think that was going to happen? We basically have a housing crisis, job crisis, all this inflation that was caused by the Fed. The big banks caused it all. And Powell says the Fed has no control when it comes to employment. Don't they have a labor mandate? Don't they look at jobs? But guys, remember, this is a plan that moves in phases. Jerome Powell said during the C word, we're not going back to that old economy. We're going to the new, and we learn things can be done with less people and remote. Remember, the C word was nothing but a test for this new fourth industrial revolution, where the robots, algorithms, and drones take the economy over, pay each other with crypto, and the sheep go inside the metaverse. And we have tariffs will definitely cause more inflation. And that's why he hinted at slowing down the runoff of this balance sheet, because if everything was going good, they'll be speeding it up. They know things are starting to crumble. We already see the holes, especially when it comes to these fiat currencies globally. And he didn't want to speak on gold. You know why he didn't want to speak on gold? Because, guys, at this price, the dollar is sitting at about 50 cents. That means he would have to speak about inflation. And I'm talking about the real effect that inflation has on the dollar. Like I stated, we're sitting at 50 cents. And remember, the Crypto Teacher told you. And guys, remember, again, your life is an illusion and TV is your reality. We have instant checkout, Walmart, and ChatGPT. OpenAI, don't forget who put big money behind OpenAI, and they was able to circulate it really fast. and that was Bill Gates' Microsoft. We know this is a plan and moves in phases, and you add in these AI agents, you add in the digital currencies, you add in the programmable money, you add in shopping inside the metaverse. Your life is going to be a real life video game. And remember, the crypto teacher told you. And we have Trump on China, on these soybeans. Remember, they haven't purchased any soybeans since the beginning of this year. And again, the farmers are going to be taking a beating. And we just bailed out Argentina with $20 billion. But we clearly see the two sides being created. And we had Scott Besson on China, saying it's China against the rest of the world. What happened to Russia? What happened to South Africa? Guys, what happened to the BRICS and the emerging markets? They're with China. Only thing you have to do is look at the Belt and Road. And India, you're talking about billions of people versus the West. But never forget, this was planned out a long time ago. We are just the chosen generation. This is a well-orchestrated plan to get us moved over to the fourth industrial revolution where the machines rise. And guys, we know that is biblical. And remember, the crypto teacher told you, because he knows when it comes to the NWO, it's all planned out. You have a wonderful day.
Although some important government data had been delayed due to the shutdown, we routinely review a wide variety of public and private sector data that have remained available. We also maintain a nationwide network of contacts through the reserve banks who provide valuable insights, which will be summarized in tomorrow's Beige Book. Based on the data we do have, it's fair to say that the outlook for employment and inflation does not appear to have changed much since our September meeting 4 weeks ago. Data available prior to the shutdown, however, show that growth in economic activity may be on a somewhat firmer trajectory than expected. While the unemployment rate remained low through August, payroll gains have slowed sharply, likely in part due to a decline in labor force growth due to lower immigration and lower labor force participation. In this less dynamic and somewhat softer labor market, the downside risks to employment appear to have risen. While official employment data for September are delayed, available evidence suggests that both layoffs and hiring remain low, and that both households' perceptions of job availability and firms' perceptions of hiring difficulty continue their downward trajectories. Meanwhile, 12-month core PCE inflation was 2.9% in August, up slightly from earlier this year, as rising core goods inflation has outpaced continued disinflation in housing services. Available data and surveys continue to show that goods price increases primarily reflect tariffs rather than broader inflationary pressures. Consistent with these effects, near-term inflation expectations have generally increased this year, while most longer-term expectation measures remain aligned with our 2% goal. Rising downside risks to employment have shifted our assessment of the balance of risks. As a result, we judged it appropriate to take another step toward a more neutral policy stance at our September meeting. There is no risk-free path for policy as we navigate the tension between our employment and inflation goals. This challenge was evident in the dispersion of committee participants' projections at the September meeting. And I'll stress again that these projections should be understood as representing a range of potential outcomes whose probabilities evolve as new information informs our meeting-by-meeting approach to policymaking. We'll set policy based on the evolution of the economic outlook and the balance of risks rather than following a predetermined path.
That might begin to look like more persistent inflation as opposed to a one-time, as if the tariff adjustment came through all at once, and then it would be quite clearly a one-time price level shift.
So that's certainly a risk. As I mentioned, there really isn't a risk-free path now since it appears that inflation is running above our target and appears to be continuing to increase quite gradually, but increase. It's still on the way up. So there's a risk there that would lend to greater persistence. But now the labor market has demonstrated pretty significant downside risks as payroll jobs have declined, and both the supply and demand for labor has declined quite sharply. So those two states of affairs for our two variables, or two goal variables, call for different monetary policy responses. So as they come more into balance, I think the idea has been that policy should move from being, tight to some degree to being more neutral as those two things balance out. But it is clear, though, that, if we move too quickly, then we may leave the inflation job unfinished and have to come back later and finish it. If we move too slowly, there may be unnecessary losses, painful losses in the employment market. So we're in the difficult situation of balancing those two things. I think for the last few months, we've been able to maintain a restrictive stance because the labor market was still pretty solid. I think that the data we got right after the July meeting showed that which adjusted back all the way through May, showed that the labor market has actually softened pretty considerably and puts us in a situation where the two risks are closer to being in balance. As you pointed out, the standard error around these things is, 50,000 plus or minus, something like that. And, that would certainly, I think the range of plausible numbers for the break-even rate is probably does go below zero, accounting for those standard errors. It's clearly come down a great deal. And that's what's so challenging about this is that both supply and demand in the labor market have come down so sharply, so quickly. And the fact that the unemployment rate has barely moved is kind of remarkable in and of itself, and suggests that they're moving at roughly the same pace. Although, of course, the unemployment rate has ticked up, which suggests that demand is moving a little faster than supply. I wouldn't want to point to a specific number other than to say that it's come way down. And there are many estimates out there. By the way, there are many ways to calculate it, so you're going to get different estimates.
You used the term gold standard, and you didn't mean it in this context, but I'm going to pivot here because there's a question from the audience that's getting a lot of upvotes. So one of your predecessors, Alan Greenspan, used to view the price of gold as an indicator of inflation risk. So in that context, how do you view the rally that we've seen in gold? And if you want to throw in Bitcoin, you can comment on that too.
I'm not going to comment on any particular asset price, including that one. And I think we think of inflation as driven by fundamental supply and demand factors, and it's not something we look at actively.
Yeah.
Spider chart and a 5 main indicators, one of which is sort of repo levels. And I think overall what they're showing is that we're still at ample reserves, abundant reserves. We're still at abundant reserves, meaning above our goal of ample reserves, a little bit above ample reserves. So, but we're beginning to see, you're starting to see a little bit of tightening in money market conditions, particularly repo rates have moved up. And those are the things we're going to be watching. So we think we're still at abundant, and we're, the pace of runoff is now very, very slow. So we're going to be watching all those factors very carefully. And we're not so far away now, but there's a ways to go. Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and when the dealers have to step in to save a treasury auction, that's a rare occurrence. And
Crypto Teacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get home stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Drama Team save the village. Part 2. King Yahshua and Grandma Tate save New York. From COVID 33, Part 3. King Yahshua and Grandma Tate goes to China.
It's mandatory to get Part 1, Part 2, and Part 3 of this series. It's time to re-educate Generation Z.